Hello, 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 and welcome to Less is More, where we talk about personal credit, business credit, travel, and life in general. At this time, before we continue, please smash that like button and subscribe to my channel so I can continue to bring these wonderful and educational videos to you. I want to begin this video with a few basic things on credit before we actually go hard on the credit score and the report itself. This video is about credit scoring and credit report, which makes up your credit profile. Before that, I'm going to go ahead and tell you my first term I want to discuss with you is credit. What is credit? Credit is your credibility as related to your name and social security number. Your credibility is built from your own financial borrowing patterns. If you're bad at paying credit back, then you're bad credit. If you're excellent at paying, then you have excellent credit. Basically, that's just basically what credit is. The second thing I want to touch over as well is what's called credit bureaus, credit reporting agencies. They're also known as that CRAs. According to the CFPB, as of 2012, there were about 400 consumer reporting companies in the United States. A lot of people only think that there are only 3 national credit bureaus, and that's Equifax, Experian, and TransUnion, but they are considered the main national credit bureaus. But there are other 400 minor ones that are out there and that compete to offer the most comprehensive information to their customers. So those customers could include mortgage lenders, car loan providers, insurance companies, collection agencies, landlords, potential and current employers, and of course you. So I wanted to get that out of the way first. Going straight into credit score. Here we go. What is credit score? Credit score is a single number between 300 to 850. Okay. Whichever company is calculating your credit score, in essence, they're just taking a snapshot of your credit report and then they summarizing your credit worthiness, much as like your grade after they look at a report card, not a report card, a grade once you have actually done a performance, and that's going to be your grade for that. You can have a score as low as 300 and you can have a score as high as 850. Of course, the higher your score, the less risk you represent to the borrower or the company that you're dealing with that is trying to give you some type of credit. Your score is then derived and calculated using 5 weighted categories. And this is important to know because your credit score basically will make you or break you. Payment history. Payment history is 35% of your credit score. The most weight is given to how bills are paid. And are payments made on time or are they delinquent? A late payment will destroy your credit. So if all you can pay is the minimum, please pay the minimum on whatever credit card, whatever bill that is, because a late payment is probably the hardest thing to try to correct and fix off your credit report. Followed by the payment history is the amount owed. That is 30%. The percentage of credit limits available. If you recall correctly, yesterday or the previous video, we discussed utilization. Amounts owed is very much used at times with or interchangeably used with utilization. And what that means is, what is your utilization of your credit that you have? For instance, if you have $10,000 and you've charged $3,000, what is your utilization? So you've used maybe approximately 30%. Okay, so that is what the utilization comes into play. How much of the credit that you have been granted are you using? And you don't want to exceed that too much. The other percent is the length of your credit history. The length of your credit history is not something that you can really fudge, but it's just something that happens. The longer you've had credit history, the better your credit score is going to be. A lot of people believe that the sweet spot for length of credit history is 7 years. And of course, then you have the credit mix, which is a type of credit. Responsibly handle a mix of credit. Just because you have 2 credit cards doesn't mean that your credit is going to shoot out to 850 because you pay all your bills on time. No, they definitely want you to have a credit mix. They want you to have installment loans. They want you to have revolving loans. They want you to have a mortgage. They want to have a car. And again, if you're still not knowing what these terms of installment loans are, revolving loans, utilization, please watch my videos from the 2 previous days where I actually went in and created videos on credit terms, lingo, and jargon, so you can better understand what I'm talking about when it comes to these different types of credit. And then lastly, again, is new credit, number of credit inquiries and new line opening dates in the last 12 to 18 months. That's 10%. So all these combined, the 35, the 30, the 15, and the 210s make your 100% credit score. Again, they're not interested in digging through all of the data and judging how much of a credit risk you represent. Instead, they actually pay somebody else to do it for them. And when they say they pay it, that's why they pay the credit reporting agencies, Equifax, TransUnion, and Experian, to provide them with your credit score. Although there's actually another scoring company out there, and it's called Vantage Score, I'm making another video between the difference between Vantage Score and FICO, so you can better understand what these FICO 8, 3s, 4s, whatever is out there, and then the Vantage Score as well. I'll be making another video on that one because it's a little bit more into detail, and I don't want to go through that in this one because this one is mainly about credit score and credit report. Again, remember those 3 credit bureau reports. FICO calculates a score based on each of them. Different lenders also use different scoring models, not necessarily just from FICO, so people generally have multiple credit scores. Unfortunately, you aren't entitled to automatically receive your credit scores for free, the way you are with your credit reports. At the end of this video, I'm actually going to teach you how to go out there and get your credit report for free. You might definitely have to pay for them. But the Dodd-Frank Act also gives you the right to see your credit score from any creditor that has used it to make a credit decision. So if you are turned down for whatever reason for a credit card, or you are in fact approved for a credit card, they are required to provide you what method was used, whether it was Equifax, Experian, or TransUnion, and that will have the credit score there, and it'll give you a better idea of what your credit score is. Also, many credit card companies and other financial institutions now provide it for free. So I know Discover does, and American Express and Capital One definitely provide it for free. Next, we have, what is your credit report? Okay, let's go into credit report. Credit report is your resume, and your credit score is your reputation. I forgot to mention that before. Now we're going into your credit report, your resume. The difference between a credit score and a credit report is that the former is a single numerical grade, while the later is a compilation of information that provides a detailed look at your financial situation. They are different, but they are linked. You know, as the score is derived from the report, both can be used by lenders to decide whether or not to grant you credit. Again, as I stated, a credit report is a detailed report of your financial history. They list every item in your credit history that affects your credit score. Unlike your credit score, your credit report provides detailed information on your financial history with loans, credit cards, charge cards. And credit reports have 4 parts. The first one is identifying information, which is your name, social, date of birth, addresses, phone numbers, employer. The next part is your credit account. On your credit accounts, you're going to have revolving accounts, installment accounts, mortgage accounts. You're going to have whether the accounts have been paid on time, when the accounts were opened, when the accounts were paid, if they were late, if they were on time, if they're charged off, if they're current, if they're not current, how long have you had it. So credit account history basically encompasses everything about your credit history. Then you have your credit inquiries. Your credit inquiries could be soft pull and can also be hard pull. As I stated yesterday or the previous video, soft pulls are those that are made during pre-approvals of credit cards, or maybe the ones that you are making when you are verifying and checking your credit with either Credit Karma, Credit Sesame, or whatever other credit monitoring system you have. Those are considered soft pulls. A soft pull does not affect your credit score. A hard pull, on the other end, affects your credit score, and a hard pull is when you have a mortgage, car company, auto loan, insurance, when they actually pull your score. It's important to note that you don't want your score pulled hard too many times, because definitely it will drop your score. They do give you a grace period of between 14 or 30 days when you are mortgage hunting or car loan hunting. They realize they don't keep hitting you as hard on your credit score when you're doing something like that. And lastly, you have public records. Public records could be tax liens, it could be judgments from court, it could be child support, it could be anything that's from the courts. If you're delinquent on any of your bills, then your credit report will likely show it. It also gives the reader your information on the number of accounts that you have open, the outstanding balances, and a host of other details. So now we get to the credit score plus the credit report. That's what your report comes down to, your credit profile, okay? Each report may be slightly different. That's why it's important to look at all three when judging your credit profile. A lot of people get confused on what is credit score, what is a credit report. Basically, the two combined equal a credit profile. This is who you are in the credit world to those out there looking, those underwriters looking at your credit and your credibility. Depending on the lender's methodology, your activity may or may not find its way to all of your reports. The information may be incorrect or missing altogether. A business doesn't have to report to all of the credit bureaus. I just need you to know that, or to any of them for that matter. And it's not necessarily the bureau's fault if the information is incorrect or missing. So with that being said, lots of times your credit reports are wrong. There's the wrong information. You have people with the same names, incorrect data. With that being said, you are entitled to a copy of your credit report from all three bureaus once every 12 months. Even better, you get them for free. The Big Three sponsor a government-sanctioned site called annualcreditreport.com, and that provides applicants for getting your free reports. Other websites are out there and they may offer the reports to you as part of a promotion or a paid membership, and that's fine. But a lot of them try to trick you into believing that that is a free site, and it is not. Make sure that you type in yourself annualcreditreport.com, because they actually have these links that they try to take you on a cookie trail, and then they end up charging you for these. So make sure you type it directly yourself into your browser to avoid the fraud. As of today, 11 September, Equifax is giving away 6 free credit reports until February 2023. So there's no excuse on getting your free reports. Again, you're entitled to a free copy of each of your credit report once a year, and they can be accessed through the government site of www.annualcreditreport.com. Again, don't forget to like and subscribe. Thank you for watching, and I will definitely catch you on my next video. Bye!